Hi friends, how are you? So today we are going to discuss about the Smartwork co-working space IPO. This IPO will be there from July 10th to July 14th, and this is going to get listed on the stock exchanges on July 17th. And this IPO, for this IPO, the price range what they have kept is it's from 387 to 407, and you can apply for 13,932, and you will be getting 36 share. And first, from this IPO, the company is going to generate 583 crore rupees. Out of 583 crores, what the company is going to get generate, 445 crores. The company will be going to put it for the fresh issue. The fresh issue mean is that the company is going to utilize this money into the company, and the company is also getting 137 crores. That is, the existing shareholders are selling some part of their shares. So the 445 crore, how the company is going to utilize the 445 crores? Company is going to pay a debt of 114 crore from the 445 crores. One portion is that. Why the company is paying that? Because the company has mentioned that they are paying interest of 10% on that debt. So that is a very high cost debt for the company. So the company is going to pay that. And since, as you know, the RBI has reduced the rates now, so company will get a cheaper debt also. So 114 crore rupees is going over there, and for 226 crore rupees, the company is going to use this in the business, and and due to that, the company will generate the revenue from there. And 137 crore rupees, what its company is getting it for the promoters. There are promoters are selling their shareholders. Right now they have 68% shareholding. It will come down to 59% for the promoters, and they have also got government of Singapore as this thing shareholder, which has got 19% as a 19% equity right now. They will be also selling 4% equity, so it will come down to 15%. So if you see, the promoters also will be remaining, will be holding the company. They will be also there in the company, and government of Singapore will be also there in the company. And they have got Deutsche Bank also as their existing shareholder, and even the Madhusudan Kela, which is who is a prominent investor, he is also invested in the company. And July 9th, the company has done the anchor investor, and for the anchor investor, the size was 174 crore rupees, which was completely subscribed. And Tata Mutual Fund and Axis Mutual Fund, Aditya Birla, Society Journal, like that, like the prominent names have taken a part, and they have invested substantial portion. Now I'll tell you what the company does. This company came into existence in 2015. What it does is, it takes the complete building on lease from the landlords, and those landlords will be HNIs or retail shareholder. It will not take from the institutions. That's very clear. And they will take the lease, and then they will give it to the clients, the complete building. Okay, so what will happen? The landlords will get a rent from there, and for the clients, which they will give it to clients which are mid-size companies or large size companies, or even the MNCs. They have got the clients. They will give it to them for their office purpose. And what it does is, they will take us like something we can say skeleton type building, and then they will completely is going to put all the amenities in the building. Like, they'll provide all the office space, like they'll provide even the parking, the gyms, the retail services, medical services, and they'll provide the entry exits of the employee, all that punching and all that, and they'll provide the food and beverages over there, and they'll provide even the complete technology which it will be required to for these purposes. They'll provide the complete technology also, and then they will pass on to the clients. so they can use for their office purposes. And their clients are some clients are very big, like Google is their client, EY is their client, Tata Elxsi is their client, and MapMy India is also their client. So these are just few of the names. So they've got a list of 738 clients, and right now they have got around 50 buildings, and the which they have leased out to the clients. And one peculiar thing which I saw in their RHP about this company is they will not lease less than 300 seats. So they will not just, if like some clients want 10-15 seats, they are not going to lease that. They are not going to give this to them. And if I'll talk about their growth, then their growth is they were having 1,30,000 seats 3 years back in 2023. Today they have got a strength of 2 lakh seats. 3 years back they were having 38 buildings they have leased out, and right now they have leased out around 50 buildings they have leased out. And if I talk about the clients, that is 521 clients they were having, and right now they have got 738 clients after 3 years. So if you see, they have got, their growth is very good. Their growth is it's working on the CAGR of 38%. If you see the industry, their industry is also growing, but they are growing at 22 to 23%. So they are growing phenomenally well. We can say definitely that by looking at their RHP. And with amenities, they are also tied up with the clear tax, like whatever the like whoever the employees are there, if they want to file the income tax, or if they have any queries of the income tax, they can just go to the clear tax people, and it can get resolved. They've also tied up for the beverages with the chai points and all that. So like from here also, like some amount they get from the ancillary services also. And this industry has got a phenomenal growth, because there are like reports where, like, to right now we have got 25% of the graduates, they will just do some higher studies, but by 2035 this 25% will become 50%. So once the more graduates will definitely they'll be doubled, so more offices will open, and so the job required, so the office requirement will be there. Then if you'll see the startups by 2014 or 15, the startups were around 1,000-2,000 startups were there. Right now the startups are more than 1 lakh. So startups once the startups will become big, so definitely this industry will grow. Then lot of the people who are shifting from rural to urban places in search of jobs and all that. So because of that also, we'll be getting a good growth for this industry. And now lot of companies are coming to India, and we are having lots of trades and all that. Our trade, if you see, we have become a 4 trillion economy now, and that is also because because of that, lots of meetings and all that will happen, lots of offices will get open, and India is a place where we have like a good like a lot of people, they speak English and all that. So that is also an additional advantage, and we have got the cheap labor, and this labor is abundant. So that is also a reason that this industry will definitely is going to grow. So now let's talk about their financials. Here I'll tell you, if you see their financials are showing losses. If you see the profit and loss account, they are showing losses. But if you see the SEBI guidelines, they are allowed to provide 35% of total issue size to retailers. Normally what will happen, as per the SEBI, if a company has got any losses in last 3 years, then the retail portion should be only 10%. But in this case, even they have got losses. The SEBI has allowed 35 percentage to retailers. I will tell you why it is so. Because we have a accounting standard 116 that has been applied, and because of that they are getting it losses. Mind you, this is not an operation loss. They are operationally, they have got a profit, and they are cash rich company also. So this thing you have to notice. Then if you see their revenue, it has been doubled for last 3 years. 3 years back it was 744 crores. Right now it is 1409 crore rupees. If you see the debt equity ratio, it was 3 years back it was around 8. Now it has come down to 3. And after paying this debt 114 crores which I have told you, the debt equity ratio will come down further. And the grey market price for this company is 25 rupees. So the what the market is expecting, this share will trade around 432 rupees. That is 407 plus 25 rupees premium it's giving. However, this is just opinion of some broker or some like poor people who are participating in that. It should not be taken the reason for investment. For investment, you have to go through completely with the RHP, and then only you should make the investment. But however, you should just know it. That's better. And after this, I'll tell you about the risk of the company. This is the most important thing which you should know. Risk of any company before investing either by primary market, by IPO, or buying it directly in the secondary market. So if you see their RHP, there are a lot of allegations against this company, right? Where some anonymous persons have written to Prime Minister Office of India, Prime Minister Office of Singapore, RBI, and Ministry of Finance, and enforcement directors also, that this company is siphoning off some of the money, or they are just operating some chit fund, and they are not working as per the objectives. There is a case of suicide also for in this company, and there also like still the case is going on. And there are cases where they have mentioned that CBI inquiry is going on against this company, and some loans are there which this company has not paid. Like they have taken some loan from HDFC Bank and ICICI Bank which they have not paid. So that also is going on. However, most of the cases, for most of the cases, the company appointed a legal firm, and they have done the independent audit, and they have come to the conclusion that most of the cases are baseless. However, still there are some cases which are going on, and I will tell you that I have seen for the first time so many cases against the promoter and company on their functioning. So like there are these cases, so tomorrow also like more cases can come like this. Maybe it will be baseless, or it could be a fact. Right now we will not able to, it is difficult to judge. And after that, if you see that they are getting the second risk is 75% of their revenue, it's coming from Pune, it's coming from Bangalore, it's coming from Bombay, it's coming from Hyderabad. So if any of the places, any geopolitical things will happen, any reservation or anything political things will happen, so these companies may suffer. Then if you see that the third thing which is I want to tell you that in 2024 they have provided some shares to existing shareholder at the price of 269, but to us now the company is providing at 407 just in 1 year. So it's around 50% they are taking more from us. So this is just I wanted to share. Then if you see that the fourth risk is very important, is like you should be very clear what building you are taking. like in Bangalore, whatever the buildings they are taking it, they are paying whatever the money they get from the client, they are paying 51 percentage to the landlord. And in Mumbai, whatever the money they are taking it from the client, they are paying 64 percentage to landlords. So if you see, the margin will be less in Mumbai and margin will be more in Bangalore. So they have to be choosy about like which building they are taking and where they are taking. So it will impact their profits. And if like a lot of services which I have told you, like parking, entry, exit, information technology, food and beverages, and medical facility, whatever they are providing in their centers, then this all services they are taking it from outside out. It's all services they are taking from the it's outsourced, and they are taking it from them, from the our third vendor. So if there is any default from the third vendor, so they will definitely suffer. Then they have got a risk because they have got, the clients are very strong. The clients are not the small time small guys. So the clients are very strong, so they have got like, the clients can come and they can just dictate the terms. They can put some of the terms which will be unfavorable to them, so they have to sometimes accept that. So that is one risk. And like just extending that, there were 19 clients were there in this fiscal year. 19 clients were there. They left the this thing, they just walked away from the contract without giving the notice period. And 3 years back it was 2. So now if you see that this has increased the, like it's a huge number, and it impacted their revenue. So that is also to be seen. And sometimes if the building is not ready and they have given a word to the client, the building will be ready for any reason, for XYZ reason. If the building, like some work is there, or the building where the client is there, the building is not as per them and all that, so then this will become a damage clause is also there, so where they have to bear for that. And if you compare this company with their peers, there is one company which was listed recently. It is Office by name. So what happens is, that company has got a better margins than this company. The reason being, I'll tell you, that here this company, whatever the amenities they provide, like gym they provide, the parking, the entry exit gate, technology, food and beverages, they will do whatever the capex they will do. They will do one portion of the capex, but that company is not doing that. So they have got slight edge over this company because of that, and hence their margins will be pressurized. This company margin will be pressurized for that. So one more risk, I just got it, because this company has got a high debt. These companies will be having more debt, so they will, whatever the money they will take for the debt, if the interest period, if the interest rate that time will be, it has to be favorable. If it is not favorable, definitely they'll pay the higher rate of interest. Like this company is paying a higher rate of interest for 114 crore, 10 percentage they are paying it. So this has to be seen, that that interest cost has to be seen for these companies. That's all from my side, and please subscribe my channel and provide your valuable comments. I will definitely coming back with one more IPO for complete analysis. Thanks a lot and good night.